precious metals finally staged a strong rebound on Tuesday, directly easing market concerns about short-term topping risks. And many investors have begun to reassess. Does this epic rally still have room for further upside? Looking at the specific trends, spot gold rose less than 0.2% to close at $4,338.67. Although the gain was not large, it at least stopped the decline and stabilized. As for spotting silver, it performed much better, surging 5.71% to close at $76.228, successfully regaining part of the losses from the previous trading days, with strong rebound momentum. In fact, you can rest assured, although short-term volatility has been increasing recently, gold and silver are very likely to end the year with a strong posture rarely seen in nearly half a century. Speaking of the core driving force behind this rally, it is fundamentally the escalating global competition around critical metal resources, especially silver. Its industrial attributes are becoming more decisive now. According to data from the Silver Institute, about 60% of global silver demand comes from industrial uses, including solar components, data center-related electronic components, and electric vehicle batteries. The continuous growth in demand from these sectors directly supports silver's long-term trend. Moreover, there have already been signs of supply locking in the market. Reports say that Samsung signed an agreement with a Mexican mining company as early as October to lock in future silver supplies in advance, indicating that the industrial chain has a very strong long-term demand expectation for such critical metals. There's another important news to note. China, as the world's third-largest silver producer, is expected to restrict silver exports starting January 1st. The introduction of this policy has further amplified market concerns about the global silver supply gap, and the expectation of supply shortages may push up prices further at any time. Analysts believe that against the backdrop of already tight market inventories, any supply restrictions or policy changes may trigger more violent price fluctuations and instead strengthen precious metal prices. Simply put, the tighter the supply side, the more upward momentum precious metals will have. Of course, macro-level support cannot be ignored. A weaker US dollar and declining interest rates are still key supporting factors for precious metals. Since the beginning of this year, the US dollar index has fallen by nearly 10%, and the Federal Reserve has cut interest rates 3 times in 2025. In this environment, funds will naturally flow back to non-interest-bearing but safe haven gold and silver, providing medium to long-term support for the market. Important disclaimer: all the above content is for reference only and does not constitute any investment advice. Any trading operations conducted based on this information are at your own risk of profit or loss. Want to receive real-time interpretations of gold and silver trends and market news analysis as soon as possible? Subscribe, like, and share with your investment friends around you now. Thanks for watching.